Hey, if you're an options trader, how'd you make out this week? Did you have success in the market? If not, then there's probably one thing that's really holding you back from having profitable trades over and over again. And what's that one thing? Learning how to read the stock charts. That's what we do just about every week. I'm here making these free videos for the trading community. Got 30 plus years in the business. I'm here to show you how to read the charts. If you want to have long-term success as an options trader, you have to know where the stock may be headed. There's no other way for you to make money when trading options. You got to figure out what the stock's going to do. And the only way to really do that on a consistent basis is by looking at the stock charts. And that's it. So each week we go over some charts. I show you my setup. I show you the screens. I show you the stocks, the indexes that I look at. We look at momentum. We look at the moving averages. We look at the RSI index. I'm going to show you all of that. And we're going to look at some patterns and trends to see which stocks may be getting ready for next week. You always want to prepare for the week coming up, so you have to look at your stock charts, all right? So let's just jump right in and look at some charts. All right, so I'm up here in the corner here. What you see in front of you is my trading platform, and I'm going to open up the chart here. So for people that are new, say the same things every week. I use daily bar charts, open, high, low, close bars, not candlesticks. So the price action for the stocks are up here. This is the price action up here. It may look a little jumbled to you, but quite honestly, it's very simple. So these vertical black lines, that's 1 day's worth of trading because these are daily charts. And if you want to go to 1 minute charts, if you're a hyperactive trader, each bar here is 1 minute, 1 minute's worth of trading. We don't do that. We're longer term traders, so we use the daily chart, okay? And these blue lines that you see here are manually drawn on the screen by me, and it's just a quick way to see which way the market or stock is trending. Trend is your friend. I mean, it's an old saying, but it's so true. The trend is your friend because the trend will continue for a while until it moves in another direction, and you want to use that trend to get in and out of your trades. All right, so up here in the price action, I have 3 moving averages. I've got this blue 20-day, I've got the red 50-day, and this green 200-day, all simple moving averages. Those are 3 of the most popular moving averages out there. So price action will tend to gravitate and bounce and move off these averages because everyone's watching the same thing and everyone reacts in the same way. So the price action moves according to a self-fulfilling prophecy a lot of the times. And down here, we use the RSI, which is an overbought, oversold oscillator. And it oscillates up between overbought and oversold based on the price action up here. And it's the 80 level and the 20 level as the horizontal lines for what I consider overbought and oversold. You can change those levels. If you open up your RSI 14-day look back period over here, and you can change it. I use 80 and 20. So, just to show an example, up over here in the middle of December, it looked like the price action was getting a little overbought. And that was, up here, we got maybe a little bit of a pullback, not much action, and the price has kept going up. So it doesn't mean it's going to have a full-on bear market if it gets overbought, and it doesn't mean it's going to bounce back right away if it gets oversold. Sometimes it does. You could see the price action here. We weren't completely oversold, but then the market started to go up off of oversold conditions. So I use this indicator as a gauge if things may be getting a little bit too frothy on the upside or a little bit too sold on the downside, and I use it as a potential turning point to keep an eye on the price action, okay? So let's jump in. Let's look at the indexes and individual stocks to see what happened over this past week of trading and what, if anything, we can see coming up for the future. All right, so we always start by looking at the S&P 500. We use the SPY, which is the exchange traded fund for the S&P 500, one of the most, if not the most liquid tradable asset out there in the world, the SPY. Okay, so we had been talking for a while, and I leave these channels up here so you can see what we've been looking at in the past. For a while, we had talked about the 460 level, which is roughly 4,600 on the S&P index itself. The SPY trades about 1/10 the size. So 460 had been our our long-term resistance for a while. And we've just recently blasted through that. And you can see how the index has been hugging along the 20-day moving average. When you have a good trending market, it will typically bounce off the 20-day moving average first. If it's strongly trending in one direction. If it's going downward strongly, if it has a bounce up, it'll get knocked back down off of that 20-day moving average. So we can see here price action has been hugging along the 20-day moving average. And to end this week, Friday, February 2nd, 2024, the S&P 500 hit more all-time new highs. The market is strong. There's really nothing that's really holding this thing back now. So you have to go along with the trend. The trend is up. Also, Friday, February 2nd, the U.S. had its unemployment numbers came out. The job market's really, really strong, came in stronger than we had thought. So that just means the U.S. Federal Reserve is not going to be pulling back on interest rates yet because the economy is still too strong. So we had a little sell-off earlier in the day, early in the morning, but the bulls are just too strong. So the market powered up and offset the early losses and closed out for a high. So for right now, the market looks strong. The market's in a good uptrend. And, until something really comes along and pushes it into a bear move, you have to buy the pullbacks. That's how you have a higher probability trades, okay? So now, we've had a good move up this week. And, we're still we're not overbought, but we're still in that upper level of overboughtness. But, a market could keep going as long as it wants to keep going. So, if you try to short this thing or try to think, well, it can't go any higher than this, it has to sell off at some point, you're going to get burned because you could have thought that here, you could have thought that here, you could have thought that here, and the market just keeps going up. So people like to pick tops and they like to pick bottoms, but if the momentum and the trend is intact, it's going to keep going in that direction. Yes, we may have the little pullbacks. You can see the pullback here, you can see the pullback here, and the pullback right here. And then it just gets bought up again as it bounces off the 20-day moving average. So don't be afraid to buy when things are making new highs, because chances are it's going to keep making new highs. People are afraid to buy on a high because they don't want to think, I just bought the top. I bought the most expensive price it's ever been. Next thing you know, it's all the way up here. So don't be afraid to buy, but buy it strategically. Make sure you buy on a pullback or when the market is having, a slow period before it gears up for the next move. Okay, so that's the SPY looking good. Let's look at the Nasdaq by using the triple Qs. Okay, so most of the indexes will follow each other and move in the same direction. Let me move this over here a little bit so we know what we're talking about. Oh, come on, catch here. Okay, let's move this over here. All right, so the Nasdaq, look how strong it is too. And you can see that it's just kind of hugging along the 20-day moving average because it's in a strong uptrend. If you want to draw more lines too, what you do is you take the approach, you connect some of the recent bottoms and you can see how strong this trend is. And now here's the new channel. Okay. So if you're looking to, make a move, you want to buy as the market is coming off the bottom, it gets down to the 20-day moving average or bounces off of the bottom edge of whatever channel you've drawn. Those are your higher probability setups. At this point, the market's moving up. So you may want to think that if I want to buy, wait until it hits the top here and turns back down again. Okay. You don't want to buy when it's coming up along here because most likely it's going to be a little bit too overbought. And yeah, there may be some more buyers behind you, but there'll be less buyers until we get another pullback. So use the channels, use the moving averages as more of your timing patterns, your higher probability setups to get into a trade. Let's look at the diamonds. DIA, that's the symbol for the Dow Jones Exchange Traded Fund, just as strong as the other indexes. Look how strong this move has been, okay? Moving along the 20-day moving average as well. So the markets are strong, but we will always have pullbacks and they can come at any time for any reason on any news. Don't be scared of that. Don't be surprised by that. Markets have to have pullbacks here and there. The one thing that some people might say is that even though the price action is moving up, the RSI is moving down. That's called a divergence. So right now we're seeing some bearish divergence, meaning the price action's going up, but the momentum of the oscillator, the RSI, is not following along and making new highs down here. So that could mean the buying is starting to slow down, starting to dry up. And then we may have the pullback either to the 20-day or the 50-day moving average, and the RSI could start to come back down to more of the middle range. And when it does, if this comes back down to more of the middle range and it comes back, the price action comes down to, let's say, the 50-day moving average, that could be your clue for the next timing pattern to get bullish on the market. Once you see that curl back up, let's say the market comes back to the 50-day moving average and the RSI gets back down to mid-range, then you wait for that next couple, 1 or 2 days of up move, and then you know that your higher probability setup is there, that you're getting on the bull train as it's had its pullback and now getting ready for the next move higher. So those are the things you want to look for. What we do here at the Smart Option Seller, we're into bullish trades, which means we sell put options, we sell put option credit spreads. Those are two of our main types of option strategies that we get into. Bullish trades, selling put option credit spreads. Let's go to our website real quick and show you what we do here at the smartoptionseller.com. Click on our free ebook right here. Click on that. You can read a little bit about this ebook that I wrote. And then down at the bottom, you can put in your name and email address here. We'll send you an email back with a link for the free ebook. This fill-in form you will see all over our website. You only need to fill it out once. I got people that fill it out 10 times. They're only going to get the ebook one time. So don't waste your time doing that. If you want to know a little bit about what we do, here's our services tab right here. We have our 2 newsletters, Selling Put Options and Selling Put Option Credit Spreads. We have our coaching sessions to get you up to speed if you need a little help. And for those of you who want to go deeper, we have our 5-part put selling, a video series where there's 5 videos and I go over in deep dive of what put selling is all about. And along with that, you get 30 days free of our Smart Option Seller newsletter, which is our put option selling newsletter. All right. So those are the things that we do here. Let's go back to the charts and bring up some individual stocks. Now we're going to talk about the biggies. There's only 10 stocks that really drive the market as a whole. And these are the biggies. Most of them are Nasdaq stocks. We're going to talk about Apple first, and then we're going to move on. So Apple had its earnings after the bell on Thursday, February 1st. Okay numbers. Let's see, for Friday, it was down about $1 per share. You can see the big range here. This is all of Friday's trading, February 2nd. Big range. Started on the lows right around 180 and rallied back the rest of the day. So we've been talking the last few weeks. If you go back and watch other videos that I've made here, you can see the 200-day moving average is really the bottom line in the sand, the end game here, where on a pullback, that could be a major area of support for quality companies. You can see, Apple got a little bit below the 200-day moving average here. This was at the end of October and bounced good. It bounced off it right here, bounced off it right here again. And just Friday, February 2nd, it went below it, but it came all the way back. So use that 200-day moving average as your support. If you want to get bullish on Apple, here were your chances right around here. Okay, Apple's not going away. It's one of the most valuable companies in the world. On a pullback, that's when you want to get in. When we sell put options, we wait for a pullback because put options get more expensive on a pullback. So that's when we sell them. That's our higher probability setup. So Apple, keep an eye on it here. This could have been the last chance to get in right around 180 before Apple's going to start hitting new highs somewhere down the road. So use the moving averages as your timing patterns. Let's look at Amazon. Had earnings yesterday, Thursday as well. They did good. The numbers were good. Look at the gap up right here. Here you go. See that? It has all the air pocket right here. This is what's called a gap up. Here's where it closed on Thursday, and here's where it traded on Friday. So you have this gap right here. And this is a good gap if you're bullish, because look how high Amazon went. Let's just see where Amazon is all time. Let's look at the monthly chart. Okay, so still haven't hit all-time highs yet on Amazon. It's between 185, or so up here. So Amazon's got a little bit of room to possibly make a run at all-time new highs. Amazon looking strong. RSI is not completely overbought yet, so there may be some more momentum coming next week. People that missed out on this move want to get in, have FOMO, fear of missing out. So they'll probably buy Amazon up a little bit on Monday as well, coming next week. So keep an eye out on that. If you're a Momo player, which means you're moving on momentum, you could probably get in for, a few more dollars on the upside before the RSI gets a little bit overbought. Let's look at Meta, Facebook, because they just had a tremendous earnings. Also, Thursday after the bell, February 1st. Look at this. It just looks like the Amazon chart. Another gap up, but this was a huge move for Facebook. $80 a share was higher on the day, Friday, February 2nd. And, I just want to point out, we had drawn this ascending triangle right here. This is a bullish pattern. You got higher highs moving upwards along this, sideways action here. And then it had a flat top, which meant it was trying to get through the resistance. And once it blasts through resistance, it's off to the races. It was storing up all this energy trying to break out of this triangle, and then it just blasted higher. Look at that. It went from 340 all the way above 480, $140 in just a very short period of time. It's amazing. So same thing with Meta. Look how the RSI is well in overbought area. So there may be a little bit of momentum coming in on Monday for those people that missed out, but I'm not so big about getting too long here because the RSI is quite overbought. I would wait for a little bit of a pullback, have some of the froth taken out. I don't think it's going to come all the way back down to the moving averages here. At this point, you got to wait for the moving averages to move up a little to catch up to the price action, and then have a little bit of pullback here. Moving averages come up here. So maybe there'll be some connection, in this area over the next week or so or two. And then that'll be your high probability setup to get long again for the next move higher. These are strong Nasdaq stocks, and they're pulling the whole market along with it. Let's look at Nvidia, just another monster stock. We look at Nvidia every week because it's one of the stocks that drives the market. And these are the patterns and the channels that we've drawn over the past to let us know when it's time to potentially get into a trade. It was sideways for a long period of time. When it trades sideways, it's gearing up the energy to blast out in one direction or another. Since it was coming from down below and moving higher, the path of least resistance is going to be higher for the next move. And look what happened. It's exactly what it did. $500 was that resistance here. If you were waiting for the breakout, you could have gotten along for this $150 move in about 1 month's time. That's just massive. You can make so much money off of that. And here, all-time new highs for Nvidia. It just keeps going up. So the RSI is definitely overbought for sure. Doesn't mean we're going to have a pullback right then and there. It just means that the buying is probably starting to dry up, slow down a little bit. So you got to wait a little bit for these moving averages to curl up a little bit more. May have some pullback, and then the next opportunity may come around $600 if we get a pullback in the price action and the moving averages come up to connect with each other. So you have to watch these things. If you want to get long because you're scared of missing the moves, wait until you have that higher probability setup. Yeah, you may have to wait, and so you have to sit on your hands and try not to give in to your FOMO. But buyer beware. If you want to try to buy at these highs, you just have to hope that people just keep coming in behind you and drive it higher so you can get out for your profits. That's a hard way to make money in the long run. So wait for those higher probability setups. Have some patience, wait for the pullback a little bit, and then if it starts to curl up again and start the next leg higher, get on the train for that move, okay? So Adobe, also another monster Nasdaq stock, doing well. I like Adobe right here to break out of this ascending triangle here. It just started to do it. You can see it. This is Friday, February 2nd, just starting to peak and poke out above the resistance. I have a feeling that Adobe is going to be that next stock to have a monster move up. It's just waiting to break out here. If anything, it may have a little pullback on Monday early on or Tuesday, and then it should blow to the upside. Just keep an eye on Adobe. Don't put everything you have into it. This is my opinion only. Don't take this as trade recommendations because that's not what it is. These are just my views of what I'm seeing on the charts. But I can see Adobe setting up for this ascending triangle move. The path of least resistance is going to be higher. So keep an eye on Adobe. Let's look at Tesla. Not having such a good time right now. We talk about Tesla. Tesla's a hard one to manage because it's pretty volatile. But look at this nasty down move that Tesla had gotten quite oversold in the last week when I made the video. I thought, you could probably do some buying in the low 180s. You probably had the chance this week as well, but it's still kind of hanging around there, still oversold. There's, Tesla's in a tough spot right now. I think they did another recall of some of their vehicles. So Tesla, it'll probably find a bottom at some point because there's so many bulls out there, and Tesla is, of course, the leading electric car maker in the world. So it can't be held down for too long. But deciding when to buy, it could keep trading lower for a little bit. Who knows? Tesla is a hard one to trade, so just be careful if you're trading Tesla. What other stocks do we like to look at? Microsoft is another one of these Nasdaq stocks that have, just powering higher. Okay. Trading off of the 20-day moving average. The moving averages are sloping upwards. That's another sign that the stock is in a strong uptrend. Whatever direction that is, the moving averages, depending on which way they're sloping, they're all sloping upwards. So that means the market is strong. This stock is strong. Microsoft is very strong. The RSI, not completely overbought. I mean, it had a little overbought here, and then it had a pullback. So people bought up that little bit of a pullback. All right. Now, if you have other stocks that aren't following along with the general market, don't feel bad. There's plenty of other stocks that are not going along for the ride, and you're thinking, these stocks are moving up $100 a share a week. Why aren't my stocks going up? Not every stock follows along. Let me see if I could find some other stocks that are just kind of churning around. We have a position in Nike that we've sold a put option credit spread, and look at Nike. I mean, it had some bad earnings here, and it's still just kind of moving down, and it's just not doing anything. And it's frustrating to me as well. I'm seeing these other stocks go up, but yet, my bullish trade on Nike is just kind of floundering down here. So don't feel bad. Not every trade's going to work, at least right away. So you have to sit through some of the bad first. We also have a position on Bristol Myers, which is actually working out for us. We have a bullish trade on Bristol Myers, which is selling puts. As long as the stock doesn't take a hard fall, a sideways action works great for selling options as well. If you don't know anything about selling put options, get that free ebook, because selling options gives you such room for directional error. You can be completely wrong on the direction you thought the stock was going to go to, but you can still make money by selling put options. Okay, sideways action in the stock is sometimes just as good as a stock moving up. So that's why we like to sell put options. It gives us a lot of room for error. Bristol Myers, I mean, it's just been in a downtrend. The whole market is going up. Healthcare stocks have been going down. And so that's a little bit frustrating as well. But we're hoping that it's going to hold here, or I'm hoping it's going to hold here. We got some support, right around $48 or so, low $48 range. And we're hoping it's going to bounce. I showed this to my newsletter this week. I'll show you. Let's go out to the monthly chart for Bristol Myers. Look how it's sitting right there on the 200-day moving average. So this perception's a little different. It looks like we're going to find some support on the 200. This is the 200-month moving average. So it should bounce there. The RSI is kind of getting oversold. So I'm hoping for a bounce in Bristol Myers. It's come down a long way from $80 down to just under $50. So I'm looking for support there. But if you go out to the daily chart, could be looked at as bearish, because if it breaks through the support, it could keep going lower. So you got the which one do I look at? The daily chart or the monthly chart? It depends what your time frame is. So we're holding our position right now. We're hoping that this support's going to hold and that Bristol Myers is going to go back up. All right. So that's pretty much what you want to do. If you want to be successful as an options trader, you have to look at the charts. You have to see which way things are trending. You have to see which way the moving averages are sloping. These are all sloping down, which means Bristol Myers is, kind of in a downtrend. The 20-day moving average is starting to maybe do a little sideways action here. So that gives me some hope that maybe we're starting to find some short-term support right here. Be patient. Don't give into FOMO. Look at the trends, look at the moving averages, look at the RSI. It'll help your game immensely because you'll be getting in at higher probability times. That's your timing patterns. All right. So don't forget to get the ebook. Go to our website. If you're interested, you can look at our 5-part video series. If this video has been helpful to you, please give me a thumbs up, give me a like. Don't forget to subscribe. Hit that red subscribe button in the bottom right-hand corner. In the description below the video, I've got lots of links for you to look at, lots of other things that may interest you. All right. And send me an email if you want. I will always answer your emails. I can't give you individual investment advice, but I can help you with your questions on options trading. I do this free for the community. So I hope this is good for everyone. All right. So I hope everyone has a great trading week next week. Don't forget to look at your charts. This is Lowell signing off.